I think, David, I'll start off with you because it's fresh in my mind, and in everyone's mind as you just finished your presentation. If you look at the drill results, you've got a mix. Obviously, you're searching for these high-grade sections, pods within a lower-grade envelope, and you have a resource that's using, obviously, with a pit shell and making those lower-grade assumptions. How do you see this developing with those high-grade hits that I'm assuming are largely coming out of that pit shell or below it, external to it? Are we looking at, with the residual grades in those intersections, are we still looking at some open pit scenarios? Are we looking at some that are clearly going to be underground mining scenarios and therefore have some implications on how you calculate resource at those depths?
Yeah, I mean that's a very good question, Brian. I mean, what we noticed when we started looking at this is that many of these areas with high grades just had like one drill hole or two drill holes into them, and then maybe 50 meters till the next drill hole or pierce point. And so we're basically trying to better define them with a closer pattern of drill holes, sort of aiming for more or less 25-meter spacing and trying to chase those from the near surface area where they would obviously fall into an open pit and down below the bottom of the pit shell and where they would be more of an underground target. So, a lot of the people looking at the current mineral resource look at the grades of the underground portion of that, and they're fairly low. And so we're basically trying to augment that or upgrade that part of it with what we do in the future, and we're trying to better define the volume of these areas so that we end up with a higher grade in the pit constrained material.
Well, so I guess to be determined.
Yeah, I mean that's our that's our plan, and we're going to put all these results in. And I didn't mention the presentation, but we're also gone back and we're sampling some historic core that was never sampled that's within the pit shell that could also yield some larger intervals of maybe lower grade material. So we're looking to build it out as best as we can.
Well, good. I think you've got one of the best teams in the business too to help you figure out the answers to all that, and good to see more drilling and more results coming up. Yeah. Our next question is submitted for Group 10, and Michael. The question is, what quarter do you expect to produce the maiden resources? And if you can narrow that down to the precise day, would be even more appreciative, Michael.
I'd be glad to. We need obviously to get our drill results in from the 2020 program. With that complete, we've now drilled ourselves all three primary areas. We're doing full suite assays. That takes time, including rhodium in particular. The models look really good. We are working with some work by AMAX from the 60s and 70s, and that complicates the process a bit. But as mentioned, we've now drilled all these three areas ourselves. I think definitely within this year, and I think within the first half is reasonable. I would, if I had to pick, I might say second quarter.
Okay, well, good. Be a little more conservative. I had a question as well. It's an awfully large project you have there, and in fact seems a bit outsized for a junior. Is there the potential or a goal for the company at some point to JV with a larger major? And given the size of the project, is there the potential to divvy it up perhaps in a number of JVs?
Absolutely, and it's owning it 100% is a good starting point for that. It is also diverse. We've got that high-grade gold section that we're growing very nicely at Pine, and that shows size, and that's obviously a different commodity focus than the broader PGE nickel copper system. We have had interest from majors. At this point, we've basically talked to every major that you can name that's relevant to the space in some form or other. Just the Stillwater name gets you in the door or has them at your core shack display. We have some CAs in place. We've not to date seen the kind of deal that we're interested in that gives a lot of value to shareholders. We see a lot of value that we can add here first, given the size of our deposit target model and given the scale of the project and how widely mineralized it is. So the short answer is we want to bring some value on the table first, I think, before you see those sort of deals. If we see the right offer this year, that's certainly possible. I still think it's a little ways out, and that we need to focus on resources at those three areas, revalue the company, and then get to work expanding them in terms of grade and scale. But definitely have their attention, and all things are possible.
Good, good. Thank you. Next question submitted is for Andrew, and I guess the preface to this is that, Andrew, you're developing or exploring two very exciting silver projects, yet the name of your company is Blackrock Gold. So the question is, how much of the value of current precious metals is silver versus gold on a percentage basis?
Well, Tonopah itself produced at about 100-to-1 silver gold ratio historically. So, that's very much a silver dominant system here, but we've got some excellent gold grades there. So it's a pure play precious metals district, which makes it very, very unique. I mean, anyone, whether you're a gold bug or you want exposure to silver, this is a hell of a way to do it, not only because of the grade, but because silver is normally a byproduct of large base metal, zinc, lead, copper mines, which can't really scale up if there's a run on, on precious metals. So we've got something very unique there. Now, the name itself, Blackrock Gold, yeah, that was it's because Silver Cloud's actually located on the cusp of the Blackrock Desert in Nevada. And Silver Cloud, despite the name, it's actually a gold target. We were seeing about 10-to-1 gold, silver to gold ratio there. So that's much more gold dominant in terms of what we're targeting. So ultimately, we've emerged as this will be one of the biggest silver discoveries of 2020. That's for sure. We've come out swinging. And that's very much how we're going to focus the company, but we'll see what we do with a Silver Cloud as we've announced that we're looking to do a spin out of that potentially the next few months, which would give shares dividend to current shareholders and effectively exposure in a new vehicle with Silver Cloud as the flagship.
Good, good. And a follow-up question for me, you had mentioned that you're coming out that resource on the DPB target, but Victor is very exciting as well. Why DPB, not Victor? And looking at the results that you're getting right now, we're looking at underground versus open pit or some combination thereof.
Yeah, I mean, Victor and DPB were both in historic underground mines. So we're effectively going in right where the historic miners left off in around 1930. And we're drilling out the extensions of the veins that they left there, like teed up for us. So in terms of Victor, that's the easiest one to demonstrate to market just because it's the thickest vein. I mean, where they stopped mining, it was reported to be 24 meters thick. In our first drill hole, we hit 30 meters. Yesterday, we announced another 18-meter hit down dip of that. But the reason we're pushing forward with DPB is because it's a confluence. There's 6 veins that are tightly spaced, and they're all mined together. So even though they're not 24 meters thick, we've got a bunch of them. And in terms of tonnage potential and I guess overall ounce potential downline, we think DPB has the ultimate upside. And that's really what we're doing. We're not taking the foot off the gas pedal at Victor. We'll be drilling that, and there's a drill rig turning as we speak. But DPB is the one that we really want to come to market with and deliver a resource, because that's going to not only backstop our valuation, but it'll allow us to potentially re-rate and fast track towards development and maybe going underground and starting to tee off from the veins, right at their face, which would be really, really fun. So that's why ultimately we're going to go with our best foot forward, and we think that's with DPB.
Good, good. Thank you. Let's move on to Spencer and Vox right now. Spencer, one of the key themes with Vox is getting on board the next big royalty train, the next big winner in the royalty space, early on in its development, early on in its growth. And again, your share price is a bit larger than some of the other royalties companies that have started at similar stages or were early on in their life cycles. But it's important to note that's precisely because your share structure is so tight. And we are at a very early stage in it. The other thing with Vox is your focus on producing and near-term producing royalties. That's another thing I stress to investors that they need to look for in a royalty company. If you're looking at early stage exploration plays, it may be 10 years before there's ever anything dug out of the ground, if there is anything. So you are trying to focus on that. Can you give us, and I know it's difficult, I know forward-looking statements and all of that stuff, but at the end of this year, can you in any way quantify what we potentially could be looking at, perhaps in a range, for actual cash flow from royalties? And perhaps the year after that, what kind of a growth curve are we actually looking at where the rubber meets the road?
Sure. No, it's a great question, Brian, and a question we get quite a lot. Maybe I'll just tackle the question in two parts. I think the first part, you were talking about, I guess, a focus on near-term producing royalties, and I just want to touch on that briefly. So, as a company, we see ourselves as disciplined allocators of capital, and consistently where we find the deepest value for our shareholders is buying royalties that are between 6 to 18 months away from first production. Sometimes we often note our competitors paying, I guess, extremely high prices for royalties that have either just come into production or are only 12 months into commissioning. So that's part of our strategy to chase that deep value for investors. Look on projects and royalties that are just on the cusp of about to come into production. So with that in mind, as we look ahead over the next sort of 12 months, as I mentioned, we've got 4 production stage assets today, and within the near term, we've got a clear pathway for that to grow to 9. Unfortunately, providing forward-looking statements on precise revenue, as you know, is a bit of a fraught exercise. But I mean, what I can say is, we're lucky enough to have a number of brokers covering us, and broker consensus revenue targets are in the range of us growing basically from about $2 million of revenues in this year to about $6 million next year, and then about $8 million the following year. So those are based on the sell side research analysts, and we see some things that could come in earlier, some things that could come in slightly later. But I think the overwhelming theme is that this will be a transformational year for Vox in all the key areas: cash flow growth, number of producing assets, and certainly the number of acquisitions we expect to do this year as well.
Yeah, and that's a good point as well, because those estimates and those projections are based on the current portfolio. And as we know, you're not sitting still and working hard to add to that portfolio. Let's move on to Cassiar Gold. Marco, you had mentioned kind of offhand that you had success in the drill program this year and anticipated a nice increase to the resource size. So as a shareholder, I'm not going to let you get off too easy on that. Can you give us an idea? And again, I know I don't want to put you in a trap. You can't give us an idea of how large an increase you're expecting, but I think it's fair to say that you are expecting to grow the resource. Can you give us an idea of the timing of that, when we can look for that? And beyond that, you also have 2 distinct projects, and I know that one you can work on the higher grade targets, you can work on a bit earlier in the year. Perhaps give us an idea of the timing of the drill programs as well, and if they're going to be staged in any way.
Yeah, absolutely. So I guess in terms of numbers, an exact number for the resource, potential resource increases, I really can't give you because I really don't know. But it's definitely going to be positive. In terms of timing, actually, the technical team, we've just we're following up on the drill results that we had last season, and to be quite honest, they were quite a bit better than we expected. So they've confirmed all our expectations. All the drill holes came in mineralized, fill gaps in the resource model that didn't have a resource, and basically we stepped out and pushed out the envelope of non-mineralization. So we were very happy with that, and with some very nice grades. Actually, following some of that drilling, the technical team actually realized there's some really attractive areas of interest, and following that deeper analysis, the team got more excited than you was for that bulk tonnage part of the resource. For those of you that don't know, the plan this year was, very much almost entirely to focus on a high grade, some really, higher grade potential additions to the resource, and then some really selective areas. So right now the plan is to follow up some with some step out drilling and infill drilling in some areas that we think are the most exciting. Although the bulk tonnage resource is open in multiple directions, we will be a little bit more selective this year. And what we are looking right now is to look at the resource upgrade following that selective step out and infill drilling at the bulk tonnage. In terms of the timing of the drilling, we are looking at Q2. So in a few months. At the bulk tonnage part of the resource, we can actually technically drill throughout the whole year, but this year we're looking at starting our drilling campaign in our camp in late May, and start basically right then and there, and at the South Cassiar on the high grade targets, because it's a bit more alpine. If you remember the picture, those portals are on the more alpine part of the property. It's more weather dependent. So the plan as we have right now is to start with the bulk tonnage target drilling, which is in the bottom of the valley, and then move to the high grade as soon as the conditions are ready, which we expect them to be basically in early June. So not that different in any case.
Good. Sooner than perhaps many would expect. Moving on now to ROX in Luis. It's very, I think we need to remember, one of the things I like about the company is the fact that there's also going to be another lottery ticket handed out to shareholders in the form of the Ecuadorian projects. And we could talk about that if we have time a little bit. But what I find really exciting is the fact that you've got Paul and Daryl and the whole team on the ground in Peru looking at other projects. And again, I know you cannot talk with forward-looking statements much at all, but are you having joy with what you're finding there? Are you finding the market amenable for some M&A? Are you looking at good projects? Are the asking prices reasonable?
Yeah, for sure. I mean, as I mentioned, my background is banking, sales, and trading. So I'm always on the lookout for assets. Look, I mean, due to the situation with COVID globally, travel to Peru has been tough, I guess, for the past year. We've been here, I'm here, and we're seeing a lot of assets that were being looked at by other companies that, weren't able to close deals. Where you've been active in discussions, and we hope those discussions will be fruitful for our shareholders in the short to medium term.
Well, good. That's interesting. Play on the pandemic, that everybody else is stuck out of Peru and you're there on the ground and looking things over. So that's a great advantage, actually. We have going to quadruple zero on our time here, and we're done with our allocation of time here. So I'd like to thank everyone for the contributions. Again, we got through 6 very exciting companies. I think this timing in the market is kind of another window of opportunity, to use a very trite and overused phrase, but I think it's very valid right now. We know what the fundamental picture is for the metals. We know what the technical picture is. It's right now not quite as good as we thought it would be, but we know that down the road, we're going to be looking at much higher prices in the metals sector, and then much higher prices for all of these really well-positioned juniors.